Okay, we are live. It's been what, a month and a half since our last Hymns Weekly? So
Yeah,
not
it
very
was
weekly,
in.
but we're
I
here.
was checking like 5 minutes ago. It was on the 18th of December, like right before the decision about Tears Appetite.
Yeah, I remember because the I left Canada on like the 22nd or 23rd, and basically that entire time, I think I put out 2 videos in 3 weeks when I was out of the country that entire time. So we're back, and it's gonna be good. It's good to see you, man.
Yeah, it's good to see you, man. It looks like a lifetime as a Hims shareholder. One
Well,
month,
I mean,
2 months is like crazy with Hims.
yeah, it's a month and a half and 80% stock performance ago, because when I left for December, I remember I was doing covered call or cash secured puts on HIMS, and I got assigned on some of them. And so I owned a couple thousand shares at like 26, 27, and then a month and a half later, and now we're doing the HIMS weekly, and it's like 40. What did I close today? 40, 41.
40, 40.
It's just an insane time to be alive.
Good times to be alive.
Yeah, it's like
And
one of the best
we,
performing stocks in the market for 2025 so far.
yeah, and we actually nailed it last time. I think we were expecting a bad decision, I guess.
Yeah,
I don't even remember what was the decision. I mean, no one remembers anymore.
that's the
W-
crazy thing. It's like these things happen. And I guess, that's something that I'd like to talk about in this episode, because it seems as though, when this thing was in October and November, any type of decision like that could rock the stock up 20, down 20. Like when Marty McCary was put on, it went up 20, and when Amazon came into the space, it went down 20, and everything else with Eli Lilly and the Tirzepatide decisions have been in that range. It seems as though we haven't really had anything, and I mean, knock on wood, but we haven't really had anything since January. Like, it's shaken off a lot of the news that would otherwise be pretty serious for it. No?
I mean, every time for the past like 3 quarters, like in the week before the earnings report, there's something like to push the stock down. So I'm expecting that pretty soon. I mean, not pretty soon because we're still like 3 weeks away from
Yeah.
earnings, right? It's on the 27, right? I think so.
24. 24.
24, 27. It's Rocket Lab. But yeah, so so probably the week before or even next week there will be some crazy news that will push it like double digits down, like for sure, which is okay. I mean, we just need to wait a month, guys. Like it's not, it's not that much.
Man, if we duplicate the same effort, like, we're going to be at 100 by the end of the year if we're going at this rate.
I'm not really betting on that,
No, no, I'm not either. But it's just, I don't
but
know. It's been
I mean,
crazy.
I don't mind, of course.
Like, that's the crazy thing about this company, man. It's like, I wouldn't mind if it fell back down to 20. Genuinely, I wouldn't mind. And I wouldn't mind if it went up to like 60, 70. And I just think that is a really interesting spot to be in mentally, because for most stocks, like 90% or 95% of the stocks that I hold, I do have a gut preference on one direction I want it to go. But for this one,
Mhm.
I still think that we're so early in the story that even if it fell down to 20, like, I think that would be a gift for a lot of people, especially now that we broke over 40.
Yeah, and $20 was like not too long ago, and now all over Twitter or all over X, you're seeing, oh, we're never going to see $20 again, guys. It looks like you don't know hymns. I mean, we're probably going to see low 30s sometime in the future. I'm not betting on that, obviously, but chill, man. So I'm right now. I'm seeing a lot of people thinking that this is, oh my god, this is a short squeeze like GameStop. This just stops at 100 or 200. I mean, yeah, it could really trigger a short squeeze. I've been looking at that, and that's why. I mean, I might trim a bit my position, but that's because I own a 4 stocks portfolio. So it will still be like a huge position even if I cut it by half, which is not going to happen. If I sell, it's like 10% or 15% to buy something else. But people
Let's
need to understand that. I mean, we need to cool down because I'm seeing a lot of posts like just pumping it like it's the last thing on earth. And I mean, yeah, I'm very bullish. Don't call me a bear. I'm not Paul Serro or something like that. But please, guys, take it easy.
let's start there, Manuel, because I found it really interesting that you said it could trigger a short squeeze. Like the last time this company reported, I think it was the January 15th numbers. I can go back and look, but they had a 30% short interest, 56 million shares sold short. I think a lot of this run up was a short squeeze. Like, I think a lot of them were covering and forced to buy the stock. And that was partially why we saw just random 7 or 8% moves on days with no news at all. So I think that when the next short report comes out, like we're gonna see significantly lower short interest. If it's higher, then that would be fucking crazy. Like that would be insane. But I think it's like a lot of people were squeezed out in this run.
Yeah, I agree with that probably, but when I said short squeeze, yeah, I mean it would be like a small one, like just a bit higher. But usually, the first quarter, no, like when they report the last quarter and give guidance for the first quarter of next year, it's
Yeah.
always the best uh, reaction to earnings that Hims has. Like last year, it pumped like 30% in a single day. It was like the time where I was like, okay, the thesis is now starting to materialize, and like everyone started to talk about Hims. Even the like many people now are bare on Hims just because it went up. And I remember perfectly, like content creators with like 50K or 60K followers like 1 year ago, they were like super pumped with Hims, and now it's it's too dangerous because of GLP-1s. Oh, watch out, guys. I mean, they just missed the run and now they're. But yeah, anyways, it went up like 30% because of the new oral solution, like not the GLP-1, the one they introduced in December 2023. And like they introduced in December and they reported in February, like they're reporting now. I remember because I was coming from Milan and I was like, I arrived from the plane and they were reporting and I was like, oh my god! And it was like my best day ever in the
Mhm.
stock market, like on that day, which is crazy because now a movement like that in terms of absolute returns, it's like nothing in my super volatile. I bet the portfolio. But essentially, 1 year ago, no one like cared about GLP-1s. All that people wanted to hear was about the oral solution, which was performing incredibly well, and it still is probably. And now, I mean, it's very curious to see like how things change in just a year. I mean, a year is nothing for a company, and it's really crazy with Hims, like how the narrative is constantly changing.
Yeah, there's so much I want to say, man. I feel like we have a lot of catching up to do on this podcast. Like November was my best month ever in terms of dollar returns. But of course, as your portfolio gets bigger, then that's obviously skewed. November was the best one ever where I was like, oh my God, this is insane. And then January was the second best. And like all of that, I think I was up like 25% in January year to date. And all of it was hymns, because everything else was up, single digits or whatever. And it's now in my second largest position, man. It's 24% of my portfolio. And do you remember the
Yeah,
chat we were having when I was like, oh, 5%, maybe I want to get it up to 10. It's 24% now.
man. Yesterday, at some point, it was my largest position. It just like went up a lot, and I was like yesterday or 2 days ago, I don't remember. And it was I even took a screenshot. It for a few minutes it was my largest position, and like it was my second largest position for a while. Then Rocket Lab surpassed it a bit, and then it just now like during this month, because it's like what 60 or 70% year to date,
Yeah,
which
it's
is
more than that.
crazy. I mean, we're at 6th of February, and it's like
Yeah, it's
absolutely
60%.
insane. And let me check. Right now, it's
Six.
28% of my portfolio.
Okay, so just to answer Jesse's question, can you run through your top four stocks right now? Or I guess your only
Uh,
four stocks.
yeah, my four stocks are iTithe, ticker symbol HITI, HIMS, you know HIMS probably, Rocket Lab, RKLB, and Nebius Group NBIS.
And that's the most recent one, right?
Yeah. I bought it in January. I'm very bullish on that name. I have a deep dive if you guys want to check. A huge thread.
Yeah, I gotta send that to me because I'd love to read about it. I know you were making posts around like, can you
Yeah, because
guys
it
fine
fell like
tune?
40% in a day after that DeepSeek drama. And I mean, it didn't make any sense. Literally, I bought a lot of shares when, I mean, I didn't catch the bottom. I mean, but I don't care. I bought at like 27, 28, 29, and it was at some point at 24. And now, like 1 week later, or not sure if it's, yeah, 1 week later, it's at 34 now.
Wow,
Crazy. All
crazy.
because of DeepSeek. Like a lot of stocks like crashed out because of DeepSeek. This market is really crazy.
This market is crazy. I was just gonna say, yeah,
But
it's a
forty
wild.
percent in a day. I mean, I I I, I think I've never seen such an overreaction, especially when I believe that it's good. Like that, all this drama with DeepSeek was actually good for the company. Not going to explain much here, but it was. I was looking at that when it was like minus 20% when it opens, and I was like, oh, this just looks like IMS when Amazon came all with those new solutions or new pricing points, let's say. And then it went down even more and was like minus 40%. And I was like, oh, this is even worse. Oh my God. I need to buy.
Yeah. So maybe let's just start with the dessert, and then we can go into the actual meal later on in this episode. You know, so you're saying we pull back probably on some news that comes out before earnings for them to try to get the stock down. I know this week the big scare was Eli Lilly and Novo earnings that both were reporting this week, and people were saying, "Oh, well, that's probably going to bring the stock down because the stock has been hypersensitive to those two names in the past with regards to GLP-1s." So before we even go into the other like news specific and earnings and on all this stuff, like what do you see for the stock? Like is $40 a sugar rush, or is this something that's more sustainable? Like do we find footing, or like just high level?
I mean, I think it's kind of fair, I would say, at this point, before knowing the numbers for like the fourth quarter and for the first quarter of 2025. I
Hmm.
think it's not overextended by any means. It might be like in terms of the chart, like the technical analysis and all that, the RSI is quite overextended, but not even that much after today's drop. But in terms of multiples, you can't really say that it's too like that it's overvalued or something like that, because it's not. At most you can say like it's reaching a fair value, and it's not like that huge opportunity that it was in when it was trading at $20 per share. But
Hmm.
it's I remain optimistic, especially because of the market we're seeing right now. Based on all that's happening with other stocks, I wouldn't really be surprised if HIMS just continues to go up during this year. I mean, obviously, it's going to be a very bumpy ride. It's always with HIMS, but I don't think it's really overvalued or expensive in terms of free cash flow multiples and all that. But it will probably be down, especially after this run. It will probably be down like 20, 30, even more percent when the semaglutide shortage comes off. But you remember when we were talking about that, like not sure which episode, but and I said I think the shortage will remain at least until February, and here we are, February, and the shortage is still on. At least 60 days or 90 days, I don't remember. We have more because when they announced, they still.
And I think it's going to last for longer than we expect, man. This new administration, I
Yeah,
think, is going to be
exactly.
very favorable.
And Novo Nordisk said in the earnings report, we're still seeing supply constraints.
Yeah, so let me throw that up actually,
And
because
I
I
mean, if it falls by like 20% when it's at 50, I mean, it comes back to $40. I mean, I'll take that. It's okay. If it falls like 30% when it's at 50, it's 35%. I mean, last week, $35 was like the all-time high for the stock. So at this point, we're kind of getting comfortable with that situation, because I understand. I mean, in my case, I'm always comfortable because my average cost is pretty low. But I understand why some people were afraid when it was like trading at $20, and they like were expecting some news from GLP-1s and it could crash to like $15 or even 10. Some people were pointing to that. I mean, in my opinion, that would be crazy, but I mean, it could happen. We've seen many like ridiculous movements with hymns. The Amazon is a good example. I think it was trading at low 20s. So I understand that for most people that got in not too long ago, they were afraid that they could like wipe out all the profits and all that. But at this point, I think not only me and you, that you have a pretty good average cost based on today's price as well, but I think people should be a bit more comfortable. And based on what we know about hymns, I think it's easier to handle the volatility after seeing so many times the same thing happening all over again, and the
Mhm.
company keeps executing. I mean, it may very well stop executing like it has been, but I see no signs of that happening. So I continue like focused on every quarter. I mean, I think it's not overextended, and I might trim a bit my position
Mhm.
because I own a four stocks portfolio, of course, and I probably might have a fifth position soon, and I need cash. I'm zero cash, like 0% cash. So
Yeah.
if I want something, I need to, and I mean, my position is already up to like 300 and something percent, like overall. I have a lot of shares bought like in the low single digits and high single digits. So I mean,
So let me.
sometimes guy like we need to lock some gains to have other opportunities, but I still feel very confident about him.
Yeah, man. Nobody ever went broke taking profits, right? But
Yeah,
let
but
me.
it's not really something I do, to be honest. Like but at some point, if I never take profits, why am I doing this?
Yeah, but you're also like in your early 20s, dude. So,
Yeah, but I want to be a millionaire at 25.
well, you picked the right stocks. Let me tell you that. Um,
So far so good.
let me just throw this up because I mean, people are, and we will talk about the Super Bowl ad. It's up next. And for earnings, we're gonna probably do a separate episode for earnings expectations, and
Yeah.
um, and so we'll brush on it, but we'll do a separate episode. Okay. I want to bring this up, right? Because I made this post, and it's really my request for people to look at the forest for the trees. And because what they see here is they see this company that's up 60% year over year, 70% year over year. And you have to realize that HIMS right now is a $9 billion market cap. Um, Eli Lilly reported Munjaro revenue for 2024 was 11.5 billion for that one product line. That's more than the market cap of HIMS. We still have 11 individual product lines over here that are on their roadmap across 4 different verticals that they still haven't released yet. 2 of them are confirmed launches in 2025. Weight loss was a recent launch in 2024, I believe, beginning of 2024 or 2023. And that weight loss was their fastest growing segment ever. And so we have all of these other launches. You're still so early in their product roadmap, in their innovation roadmap. Who cares that the stock went from 13 to 45, in a matter of 3 or 4 months, because you're still so early in terms of their actual demand and their actual roadmap. There's so many people that still don't know this company. If you look at their subscriber count, it's still so incredibly low, like single digit millions. and then you look at the population of the US alone, let alone other countries, and you look at all the other product lines that they have already on their roadmap, and you're like, this, like, we're still in super early innings for this business, to the point where a competitor in Eli Lilly can do more revenue than in one product line than this company's entire market cap. So, I mean, just think about it like that. And whenever I think about it like that, regardless of what the price is, it makes me bullish to buy more. Because if you're thinking of it from a long time horizon, then there's only one direction that this company can really go if they continue to execute the way that they are. And they are.
I mean, yeah, that's exactly one of the things that I've always like loved in hymns since the beginning. It's the optionality of the company.
Yeah.
The thing of compounding medications makes it super easy, especially now that they own the 503B compounding pharmacy and all that, and they're verticalizing the supply chain and everything. It's really easy for them to enter a new category. They could even do it faster than what they do, but Andrew has always said that before launching a product, they test it during months. I mean, most compounders like don't do this, but hims is reaching a scale, and they also want to like the efficiency not only will bring more clients and all that and retention rates and everything else, but will also help with the brand like perception that customers have. Because not too long ago, like 2 years ago, or not even that much, or maybe 2 3 years ago, hims was just a boner pill company. I remember that. It's true, I remember the times when hims, what caused IMS to spike up or spike down was news regarding Viagra. I remember one day, like IMS was at $7 or something like that. I don't really remember, and there was like an alert saying, "Oh, a new study come out, and Viagra is good for health, heart problems or something like that." And IMS spiked like 7 or 8% because it was. I mean, it was not just a boner company. Otherwise, I wouldn't invest in them because I was already seeing the thesis behind and all the direction. I mean, I was like confident that they would go in that direction, and fortunately, it has happened. But it's really incredible how they rolled out so many new verticals in the meantime, and they still have much more. And as I was saying, they usually take a lot of time to test the products and to try to have like safety protocols, even if they don't need to do it legally. It's a way of protecting them, because if I remember, like when it was under followed, many people wanted to be away from hymns because they would tell me like, what happens if a customer dies because the product was not safe? And I mean, I understand the point, because at that time hymns was like a small company. It had like 203 or 4 or 500 million dollars in revenue, and compounding supposedly is to be done in not huge quantities. So I understood the point, but I was seeing the execution and I was listening to the earnings calls and all that. And I felt that they were really trying to be safe. And especially when everyone started to talk about GLP-1s, like that didn't happen in 2024. People started to talk about GLP-1s in like early 2023, even like late 2022. There were analysts asking him like, why don't you compound things related to weight loss? Because everyone was already like becoming bullish about all the demand coming from weight loss customers and all that. And Andrew was always like, yeah, we want to enter weight loss and we could already like be there, but I want to do it like slowly because I want to be to have like all the safety protocols. I have to have a good product. I have to have all that. And that's long-term thinking allied to the optionality of the business. It's one of the things that made me feel that this was a good company to hold for the long term at that time. One of the things, obviously. And here, it's the same. They've been talking about menopause treatments and hormonal therapy and all that for a while, and they could probably already release that in last year or something like that. But and this also brings me to what we've talked like in a previous episode, when I said that they could be slowing down that because of the GLP-1 cut off in revenue that they might see, and then
Yeah.
to compensate a bit, it might be possible. But I think one of the real reasons and one of the things that Hims does a lot is try to be 100% safe in all the new verticals they launch. Because one thing, it's to argue that it's not effective, and one really different thing is to argue that you're arming your customers, and that for the brand would be terrible.
Yeah, and I think like, I mean, you're talking about when this company was like 1/10 the size, when it was like a $4
Yeah,
stock, $1 billion company,
I
and
remember when it had like $800 million market cap, and it had $400 million in cash and no debt, and like it was trading at an EV of 1. And I was like, okay, 'cause I quoted a post because it was actually funny, but I had like no cash compared to the size of my portfolio right now, so I just bought a few shares. But I
right.
bought some shares at 270, like the real bottom. It reported a blowout quarter, like a huge quarter, and it went down like 10 or 15%. I don't know why. And I even went to, like, I was running a portfolio for a friend of mine, and I went there and I bought even more shares than I bought to myself. And he's now like, Hims is like his biggest position, like off of the portfolio, because I told him, don't sell that, keep them. And now he actually sent me a screenshot yesterday, and I was like, oh man, this guy has an average cost even better than mine.
It's actually insane when you think about it, because 270 was like the absolute bottom of
Yeah,
stock all
it was.
time.
Yeah. It was crazy because I was looking at that and I was like, because I mean, now I'm much more experienced as an investor than I was back then, because I made a lot of mistakes even
Mhm.
when I was like getting hymns very well and like very right. I was doing other mistakes, obviously. But at that time I didn't have much cash. I was like 19 years old or something like that, and or 20. I'm not I'm not really sure. So
I'm
I
so
didn't have
confused.
much. I didn't have much cash, so it's okay. All the mistakes I made, I didn't lose that much cash, or like an irrelevant amount of cash compared to my portfolio right now. But I was like, am I stupid? Like, why the hell is this going down? And I was like, oh, I'm going to buy it. But then I was like, I bought like 100 shares or 200 shares, and I was like, oh, what am I not seeing? Like, why the hell is this going down? They're full of cash. They have no debt. They're almost like they were like being valued at 2 times cash and no debt, no liabilities on the balance sheet, growing like crazy. They had projected $200 million for that year back when the spec presentation came out, and they reported the double. And I was like, what the hell is going on? Do I know something about the stock market, or am I just burning money here? But now I know the answer.
Yeah. That's amazing, man. Honestly, like, to catch a 20x when you're 19
I
is,
mean, it's not 20x
well,
yet.
I mean, if you buy it at $2 and it goes to 40, I'm sure we'll get 18x or
We'll get there. Yeah, we'll get
who
there.
cares, 10x even. you know?
I mean, it's more, to be honest, it's more about the feeling, because as I said, I didn't buy that much at that time. But I'm glad I averaged up, because I averaged up and I also averaged down considerably. But if I didn't have like averaged up, the gains would be like not that relevant. Even a 10x on the amount of shares I bought compared to my portfolio size today, it wouldn't be that much. So this really proves the power of not getting like stuck with average costs. And this is actually something I a mistake I made with Rocket Lab, because I wanted to buy like a lot of shares at $4, and I bought as much as I could. I even borrowed some money from my brother to do it, and but then it went up to $10 so quickly, and I didn't buy the shares I wanted. And I was like, okay, and now I'm not going to buy at $10. I mean, I have such a beautiful average cost, and it went up in just 1 month. But I felt that $10 was still very cheap. But I was like, no, I am not going to do it. And now, I mean,
Man,
I'm I'm at 6x in half a year, and I could have like the double of the profits in terms of in absolute returns. But as I was stuck with my average cost, and I was like, oh, I don't want to increase it.
I think the lowest average cost that I have, and I've been averaging up across all of my accounts, but the lowest average cost is $15 for mine. And I bought it as low as 13, but then I've just been buying. And then I have 22 in another account, and I have 20 in a third account, and then 26 in the last account. I'm okay with that.
Yeah,
I
it's
think you blend that all together, you get like $23 or $22 or something. So it's fine, bro. But
yeah,
I've
it's
only been in this
amazing.
since August.
And I remember we were talking about that. You were like buying at $20 and saying this is still cheap, and it was. And I was like, and it was not that far from all time high. And a lot of people were like, "Oh, hymns, yeah, yeah, that's fishy stock, yeah, yeah. Be careful, be careful." But I mean, it was so cheap in terms of free cash flow multiples. It was really. If I didn't have a position, I would buy at those prices. It was a clear opportunity. And you said about the your average costs. I think the highest price at which I bought hymns was $16. 16.30, yeah. It was after the earnings report when it fell. Like I think the first earnings report after GLP-1s. Yeah. Then it fell to $13 after that, after my purchase. And everyone was like on X saying, "Oh, now it will close the gap at 4." This is like a my favorite joke about him is like because I'm at a group of Portuguese investors, like we're like 18, and we talk like daily for a long time. And I mean, when I bought hymns, like when I built my position at a large scale, at that time I had an average cost of $8. It was at $8 or $9, and I was like, buy hymns, buy hymns, buy hymns, and most of them were like, oh, it has a huge gap at $4. It will close it for sure. And I was like, it's impossible because it was that gap was like the first, not the first, but the second earnings report after that bottom of 270, and it had like that power gap that sometimes stocks have when they jump a lot and they just don't go back to that those levels again. And hymns, I mean, if hymns went to $4 after those numbers, I mean, it would be even cheaper than when it was at 270 because the numbers were evolving so rapidly because it would really not make any sense. And I was like, please don't get stuck with the gaps. I mean, a lot of people just don't buy stocks just because they have a huge gap below. I mean, guys, chill. Fundamentals matter more than the gaps that it has. Hims will never close his gap at $4. It will probably never close his gap at $10, and it will probably never close many other gaps. It's
Yeah, I mean,
just
what is it
not.
like? 10% of gaps never get closed, something like that. But anyways, it doesn't. I mean, it could fall back down to in the 20s, like I said.
Yeah,
Uh,
yeah. But it's just funny because people are always waiting for an opportunity, and when they come, they're like, "Oh, I want it a bit lower."
yeah,
I
or they're
remember,
scared to go in because there's
and
FUD.
yeah,
Or,
or they scared because of the thing that supposedly made it drop. Like when Amazon came in, a lot of people in the weeks before were like, "Oh, I want this stock again at $20. I really want to buy more shares." And then it went down to 19 or 20, I don't remember. And everyone were like, "Ooh, maybe now it's different. Amazon is now here." I mean, Amazon was there for a while, man. If you wanted to buy the stock, you should have known that. What the hell?
so let's talk about this because there was some news today that was, I think, interesting with regards to this industry group action. So basically, this is the Super Bowl news that I just want to bring up. So Hims has an ad, a commercial that they're going to be playing at the Super Bowl. We've already seen the commercial. It actually was published on YouTube. And hold on, I just opened it up accidentally. It has 47,000 views in 9 days on YouTube. And hers is an account with 1.9 like 1,900 subscribers. So to have an advertisement reach 47,000 views, that's very impressive. And this is going to be played at the Super Bowl. It's going to be viewed by millions of people, obviously. And what we found today was this industry group. Actually, I might have the open letter. Let me see if I have it. I might be able to pull up the open letter here. This industry group, this group from Big Pharma, basically was asking the FDA to remove or to take action against this Hims Super Bowl ad. And that was really interesting. But one of the more interesting things, and maybe I can get your thoughts and then we can jump into, I'll find the actual open letter. Yeah, here it is. So I can throw this up. And I don't know if you've read this or not. Have you read this letter?
I didn't read. I didn't read the letter, but I read the
So
highlights from
we're gonna read it together now. So this is
Okay.
from yesterday, Feb 5th, letter to the FDA Office of Prescription Drug Promotion, saying that there's irresponsible Super Bowl commercial by Hims and Hers. And basically what these guys are saying is they want to express their alarm over a dangerous commercial for compounded
Ooh.
that they plan to run during the Super Bowl on Feb 9th. The full 60-second commercial was posted as a knockoff, in bold, as a knockoff copy of a prescription drug. The commercial for this product should comply with FDA prescription drug ad rules. We request you act to enforce the laws, blah, blah, blah. Incredibly irresponsible. It's a very strongly worded letter. Blatantly misleading, poses substantial risk of harming the approximately 200 million consumers that will see the commercial during Super Bowl on Sunday. And while this is the most egregious example, blah, 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 recent academic research highlights that deception is commonplace among those who market compounded weight loss drugs. Like, this is very, very strongly worded. American consumers deserve better, and we call on the FDA to take swift action to prevent Hims and Hers from continuing to mislead the public through further dissemination of its commercial that should comply with prescription drug ad guidelines. So anyways, they go on to explain why this commercial is misleading. And I entirely agree with Sergey here. This letter feels desperate. And, I posted about this, and a bunch of us posted about this in the Hims community around. Here was my post saying that Big Pharma here really wants to muzzle Hims Super Bowl commercial, but likely can't. As a result of a regulatory freeze on January 20th, the Fed is essentially, or the FDA is essentially frozen, blocked from taking any action. But I was also saying that I hope that they make a bigger fuss from this press release so we can get the full Streisand effect going. And for those who are not aware, the Streisand effect is the more you try to cover up something, the inadvertently you're causing more advertisement for that thing. And it was funny because just before we were about to hop on this podcast, we saw the official Hims and Hers brand, or the Hers brand, I should say, make this post saying Big Pharma is not fighting for you. Here's the ad they don't want you to see. And, I said, I'd love to see Andrew and the Hims team fight back. Millions are going to see this commercial on Sunday, and it's going to do wonders for brand awareness and subscriber growth. And there's nothing the FDA or these big pharma groups can really do about it, because this company is on the up and up. They are going to reach more brand awareness. They're going to reach more subscribers. They're going to reach more critical mass. They're going to cross that inflection point, that tipping point. And this is why I still say we're so early in the story, because I see the desperate attempts from these multi-billion-dollar organizations to try to suppress this like small $9 billion company.
I mean, that just screams like how, I wouldn't say desperate, but how worried they are. They're worried about not only GLP-1s, but everything regarding compounding medications. Because until this point, compounders were like just a small, very, very tiny part of like sales of everything, probably. And now they're seeing a company like Hims doing probably $2 billion in sales this year, which is huge. Man, I mean, like 4 years ago, they were making a tenth of that. So no one cared about them. As I was saying, they were just like a boner pill company. Now these coupled with a lot of things that have been happening over the past few months just tells how important hymns is becoming in the system, I would say. And as more people use it, as more people talk about it, even as more investors invest in the company, because that will always bring, like, a lot of my friends know about hymns even though they're not even from the US and all that. And imagine that happens in a lot of different places. And I think each quarter, each day, I mean, it just gets reinforced more. And these type of things, I mean, for me it's irrelevant. If I mean, they even first, I don't really think it would make sense for, even if the FDA was not frozen. I mean, why the hell would they prevent that head? I mean, otherwise they would prevent the, like, hymns from doing any head about GLP-1s and all compounders from advertising compounding medicines and all that. So it wouldn't make any sense. And I think those companies know that. So it just screams desperate. And, like, as I was saying, like, just how Hims is becoming a relevant. I'm not even saying a big player, because Hims is not a big player if we look at the big picture, but it's becoming relevant. And being relevant in a world or in a market which is absolutely huge. It's one of the largest markets in the US, probably. It's really a big thing just to become relevant.
Yeah, I think the argument is that the FDA essentially has basically telegraphed that they compounded drugs are not FDA approved, that we know that this is going to come off shortage at some point or another. And it doesn't make sense for HIMS to essentially promote these drugs that are, compounded for somebody else. Like they have the patents and whatnot. And whenever those come off shortage, then HIMS can't really sell it anymore. Right. So
Yeah, but I mean, it's just because it's the Super Bowl. So
yeah, of course, just because
what about the other ads? Like, IMS is all across the social media and all that, and even those pages in the Wall Street Journal and all the marketing they make, which is incredible. And I mean, if they need to take out the ad from Super Bowl, they would need to take it from everywhere. I don't think it's a particular case just because it's the Super Bowl. They're worried about that because it brings a lot of attention and it has millions of viewers. That's why they're worried, because I mean, it will probably pay off. And even if it doesn't pay off, I mean, it's not really something relevant. That's just, in my opinion, I think it's really stupid, the letter. I mean,
no, I
they
think you
they
nailed it. I
could
mean,
they could
it's just
warn people in much smarter ways.
no. I mean, I think you nailed it. It's hypocritical for them to, make a fuss about the Super Bowl because of the magnitude, while at the same time to not make a fuss this entire time when Hims has been doing all of their marketing campaigns across the board. And this is why I think, Sagig said desperate. You said they're scared, and that's, I think, the general sentiment is they are not happy, worried, desperate, whatever you want to say about the magnitude of this megaphone that Hims is going to have, of this event that's telegraphed around the world. Like it's going to be um,
Yeah, and
millions and millions of people watching.
for the size of, like, the companies, the like hymns shouldn't be relevant. It should be just, I mean, another player. But that's why they're now starting to take compounded medications seriously, and, like, they understanding the. And Trump will see the ad. I mean, he's going to the Super Bowl, right?
Trump will see the ad, but I mean, look, man, like you have basically what 2 million subscribers for Hims, and now you're going to have an audience of 100x their user base.
Yeah,
You're going to
and,
have
like,
200 million people watching.
and from those 200 million, like, a lot of
Let's say
people
from those
need weight loss solutions, I would say.
let's just say from those 200 million, 1% of them go to the website. That's double their user base.
But I'm not sure if
I'm just saying,
1%.
right? Like,
Yeah, but still, yeah, yeah,
that's still a 50% increase on all the users that they've accumulated up until this point.
yeah. It's huge. And do you know like how much would it cost? Like
A Super
the
Bowl
ad?
ad?
Yeah,
Yeah, I
yeah.
think like anywhere between 6 million and 14 million, something like that. Because it's
I
a
mean,
60-second ad, so it's going to be, I
but
think it was,
him's head is 60 seconds.
yes. Well,
Ah,
that's
yeah,
what
yeah.
the
It
letter was
is.
saying, yeah. So yeah, maybe like 10 million, 12 million would be my guess.
I mean,
Yeah,
not that much.
7 million per 30 seconds, so 14.
7 million for.
I mean,
Yeah,
not that much if you think about it.
yeah,
Like,
yeah. Exactly.
be crazy.
Could be way worse.
But I found it interesting how, like, I mean, it makes sense, I guess, for them to focus on weight loss because if they were going to launch like testosterone or menopause or whatever, like, why not launch it at the end of this week and then do the first commercial for that on the super? You know what I'm saying? Like, you could get a boost on a new product line versus a product line that you know is sort of going to go away with regards to the GLP-1.
I mean, but as they know it's going away, they're trying to milk it as much as possible.
I guess. But those users, I mean, like, let's just say I sign up as a result of the Super Bowl ad, and then in March it goes away. Then I'm a user for a month, and then I'm like, okay, well, what do I do now? And they're going to try to get me to some other product line.
They're going to try to push you to the oral solution.
Yeah, I know, but I'm saying it's an uphill battle for a very short time
Yeah,
frame.
yeah. I understand the point. I understand the point, but I'm just trying to think how they're probably thinking.
Mhm.
And I mean, I don't think it's dumb to bet as much as possible. As I mean, while they still can in GLP-1s, especially because we don't know when the shortage is coming to an end. So you're saying March, but it may very well be April, May, June. I mean, we don't know, and especially because of I don't remember if it's 60 or 90 days, but I think 60 days that they have once the shortage is over. They still have 60 days to keep delivering the GLP-1. So
Right.
imagine the shortage ends tomorrow. They can still go until the end of April,
Yep.
so at least the first quarter of this year will be fully with GLP-1s. Sorry. So,
Yeah.
and if it ends in April, we can still have also most of the
Until
second
June.
quarter.
Yeah, until end of June.
Like not too long ago, people thought the shortage would be over in December after all the
Yeah,
drama with
tirzepatide.
tirzepatide and all that. The analysts were just downgrading that Bank of America price target of $18 after raising 3 times in a month. It's crazy how things change.
And
But
it's
I'm
such
not really
a
worried about that.
time.
As I said, we're now comfortable.
Yeah. I I don't know, man. Like, I think it's going to be a cool time for him. Like, 2025 is going to be a big year for him. And I really want to hear from management, what their expectation is after they report, what they're seeing in the market, what their guidance is, if they're going to release a new product line around earnings time, or if they're going to announce it at earnings, because they have done so in the past and they've teased out these new product lines. But I
What I
just
want to
overall see the frustration and the anger and the objection that was thrown around the RFK nomination. These people were so, like, Congress people were so mad that RFK was going after big pharma. And as a HIMS investor, I'm like, this has got to be good. This has got to be good for us.
Yeah, but he's also against GLP-1s. So not against, but he's not really a fan. He thinks like people should like do some exercise instead of taking weight loss drugs and all that. But I mean, if that's like a big issue that he would need to do a lot of things. It will never weight loss drugs will never be banned at this point. So if he really is against big pharma, I think the best way to not attack them but try to make them vulnerable is to protect these kind of compounders, I would say. Not protect, but at least try not to have the FDA shutting their their business lines or something like that. And we still don't know about the personalization thing that Andrew keeps telling investors that Hims will be able to continue selling GLP-1s after the shortage. We still really need to know more about that.
Yeah, yeah. It's
Again, for a long time, that was the main thing about Hims and all that people talked about, and now we didn't even remember. And I think in these earnings, it might surprise us with liraglutide.
yeah.
I
They've
think
talked
it
about that
might,
in the past. They talked about it in the last earnings call as well.
yeah, because he said we're going to introduce it in 2025, and I
Mhm.
mean we're in 2025, so it's pretty possible.
I
And
mean, that might
he
be.
can really be trying to like um, roll out liraglutide before the shortage comes to an end, and then try to stick with those customers and say, okay, we're going to give you liraglutide instead of semaglutide. It's still effective, but just a bit less. So we're going to give you a 30% discount, on the price or something like that. You feel me? Like it could be very well a good strategy if they can like push the liraglutide introduction to before the shortage ends, because then they will have the 60 days to like normalize the supply chain and all that. So I
Yeah.
think it might be a good surprise.
I don't know that they would introduce, like, just strategically speaking, because I mean, you said, hey, they might be saving menopause or testosterone for when semaglutide ends, so as to like make a cushion of that
Yeah, not
reaction.
really
But
saving, but
I think liraglutide might be something like that, because if I'm thinking strategically, why would I release liraglutide now? I can prepare for it internally, but I would really save the release for only when semaglutide is running out of that shortage list, and only then start to publicly release liraglutide and start to migrate people over. Like, I don't understand why, or if there is a good reason why they would release liraglutide and semaglutide and have them running on two separate paths. I just think that would be
I
confusing to
think
me.
that's because they have two different price points. Like Andrew said, liraglutide is going to be cheaper than semaglutide, and he has always been open that he wants to have like a he wants to someone to go to his or her website, go to the weight loss part, and have like a bunch of different options. That's what he's always saying. That's like the main goal, to have like even to get access to the branded versions. But after these wars, I'm not sure that's going to happen anytime soon. But like you go there and you have like the oral solution with the doctor and all that, the first one that they released. Then you have liraglutide, you have semaglutide, you have the pills that all the companies are developing. He also said that he wants to do compounded versions of those pills, like when they come out. He said there's like 10 or 20 weight loss drugs in the pipeline of several big pharma, and we want to compound many of them.
Yep.
So that's why I think he could introduce before ending the semaglutide, and especially because of the price points. Because they recently, like 1 or 2 months ago, I don't remember, they decreased the prices of the weight loss solutions because they want to make it more affordable. And I mean, it goes in line with the company's mission, which is
Mhm.
to give high quality personalized healthcare treatments at affordable prices and all that, or to democratize the access to quality healthcare, let's say. Let's say, to look like an analyst. But I think it could be a good strategy. I understand that they could like wait. And regarding menopause and testosterone, I'm not saying that they're going to wait until the last minute of semaglutide, but they could very well be waiting at least for 2025 and like release it now, because it will be now or whatever. Because then they will have a lot of months with sales from those verticals to compensate for, imagine like the second half of the year there's no GLP-1s, At least you have during the full year you have menopause treatments that were not existent in 2024, so you still will see a significant growth. And then in 2026 you will have probably new verticals and all that. So I think they will try to make the effect of stopping the semaglutide not really seen in the chart. You feel me? Like
Mhm.
they probably want to because if you look at him's chart, I mean, it's revenue chart. It's probably the most beautiful thing you can like
Yeah,
see.
just
It's just,
exponential growth curve.
and there's no quarter like without an increase. It's absolutely insane. Of course, that won't happen forever, but I think they're trying to keep these track records like immaculate.
Hmm.
But they don't need to wait until the last time. It's not really what I meant when I said that.
Hmm. That's fair. I'm sure we're going to talk a lot more about it in our earnings predictions episode, and of
Hmm.
course, we're gonna tune into the earnings on February 24th. I'm really looking forward to hearing what Andrew and the team have done this past quarter, and just the questions that analysts ask them in general. I think that's going to be really good. Sagagast, and maybe I thought we could close off on this for the last 4 minutes of the show as a teaser before the special earnings episode, which we're yet to schedule. What's one thing you're most bullish on this earnings? User growth, revenue, new product, free cash flow, or anything else? I'll let you go first.
I mean, I'm not sure if I know how to answer that. Do you have anything in mind? Like right
Yeah, so I
ahead?
can I can I can answer that. I think for myself, the two things that I am most interested in is, well, three things actually that I'm most interested in. I think number one is I'm interested to see how big they beat revenue, and I have a number in mind. I've already written it down. I think I've talked about it in previous podcasts as well. Um, so because they always triple beat essentially, and you have this company that's going into this earnings with like a 90% revenue guidance, so they're going to beat that. And by how much is the question. I think the thing that I'm really looking forward to is what new product line they end up introducing, or if they talk about new product line at all. Overall, I think for hims, I want them to divert the attention away from the GLP-1 narrative as much as possible, because I think that is going to be necessary for us not to for it not to be just be tied down to whatever Novo does or whatever Eli Lilly does, and be less volatile as a result. So I really want them to talk about that. I want them to talk about the new products that they're thinking about launching, even if they don't launch a product in Q1, to provide some more color around those new products. And then the last thing I will say is I really am looking forward to seeing what the guidance numbers are, because that's really going to frame our expectation for the full year 2025, right? Like in the last quarter, they said, hey, we're growing 40% even without GLP-1s. Like, that's great. I want more of that kind of stuff around what does that growth look like, and how are you planning to compound that growth? Is it still mainly sales and marketing spend, or what does that flywheel look like in general? So I hope they talk a lot more about that.
So yeah, I agree that that's all important, but I think what will move the stock more will be the guidance for the first quarter.
Hmm.
And
Okay.
something I'm very curious, because I mean they will report like at 2/3 of the quarter already, so they will have a pretty good picture at least of the first quarter, and they
Yep.
will give guidance for the full year as well. They always do, so that will also be very interesting to see
Hmm.
how it compares with the estimates. Right now, the estimates are like what, 2 billions or
Something like
something.
that.
Yeah, 2.1 or 2.05 or something like that. So
Yeah.
I'm really, I mean, IMS always crushes the estimates by a lot, and
Yep.
I'm not sure if they're going to do it like in 2025, because they always give somewhat conservative guidances, even though they're all always good, they prove to be conservative.
Hmm.
But specifically the first quarter, I really want to see. And then if with HIMS you can really compare, like for instance, to understand their expectations regarding the GLP-1 shortage and all that, we can compare the first quarter guidance with the full year guidance and see if they expect a slowdown or something like that. Because imagine if they guide like $550 million for the first quarter, which would be huge, and then
Mhm.
they just guide 2 billion for the year. I mean, HIMS is always growing every single quarter. So if they have 550 in the first quarter, we should expect much more than 2 billions for the whole year. You feel me? Like that would probably mean that they expect it to happen soon or something like that. So I'm one of the things I really want to see is that difference between like the first quarter guidance, which they know at least a very good picture of how they're going to be, because I mean it will be like 2/3 of the quarter already when they
Mhm.
report the earnings, and then like see the full year. And then I mean all things, I always like to see free cash flow. They're always great free cash flow, gross margins. I want to see how the GLP-1s becoming a larger slice of the revenues
Mhm.
are impacting gross margins. I mean, I'm expecting them to decrease, but it's also uh, also want them to mention like how is the compounding pharmacy that they acquired, the 503B, like
Mhm.
helping to manage the supply chain regarding GLP-1s, because it was one of the main reasons why they bought it, to help increase a bit the gross margins of GLP-1s and with the personalization and all that. And speaking of personalization, like the number of, I want to see the number like following the same trend. Like the more personalized subscribers, the better. And I expect that number to keep gradually increasing, as even Andrew pointed to that, like to have over 90% of subscribers personalized in a not so distant future. So yeah, I think those are mostly the main points.
Yeah,
But I mean,
I think that's a
the
good look.
earnings are always like full of precious. Like less earnings, we didn't know about liraglutide, we didn't know about a bunch of stuff. So there's always, we will need, we will have like a lot of stuff to talk about.
Okay, and I think with that we can wrap up this show. Um, Again, thanks everybody for bearing with us while we didn't do shows for the last little while. We will be back with more shows. We will do a earnings breakdown and an earnings expectation for HIMS. So stay tuned for more. And thanks so much, and we'll see you in the next one.
Thanks, guys.